Hey guys, we got a lot to go over with crypto because the president of the Minneapolis Federal Reserve came out yesterday and basically what he said helped to crash the crypto market. Not too good. And we also saw a major thing come out from chief investment strategist at Charles Schwab, not being too optimistic about Bitcoin and crypto either. So we're going to talk about what both of these people said, and we're also going to talk about if it's really valid, if it's something we need to worry about. So if you guys enjoy this sort of content, well then please be sure to like the video, subscribe to the channel, turn on the bell notifications, and again, let's see if we get this video up to 2,000 likes. If we can, we'll open up Discord to everyone. But anyways, so first thing is what happened with the Minneapolis Federal Reserve President, Neil Kashkari. So essentially, he came out at a conference just the other day, and what he said was that with crypto, it's 95% fraud, confusion, and basically, he said it's a scam. He said that the thing about crypto that he doesn't like is that anyone can create it. He could create his own coin called Neil Coin tomorrow. The other thing that he said is that right now, there have been so many Ponzi schemes, so many scams where people have lost their life savings because what happens is people just create a coin, they call it whatever they want, they get people to invest in it, and then the founders end up just dumping their positions, selling off, and shutting down the coin. We've seen it happen countless times already. So he says with crypto, the thing is he has seen thousands of scam coins created, thousands of dollars, hundreds of millions of dollars been scammed from people, and now the thing is he doesn't even see real use cases for it. He says right now, like, the question he has always asked is, what are the real use cases for crypto? And for someone not to know that, I think is a bit concerning, because with crypto, the use cases that everyone talks about, the use cases that really everyone should know about crypto by this point, is that right now with crypto, you have, first of all, helping the unbanked population. With crypto, one of the biggest things with it is it's decentralized. You don't need to have a bank account. There's no central organization. So it helps the unbanked population have access to financial services. Another thing is like cross-border payments. So you can send money cross borders with, like, instantly, with basically zero transaction fees. Can't do that with regular currency. Also think about with wire transfers. If you want to wire transfer money, can't send it unless it's during like business hours. It doesn't happen instantaneously. There's that. There's also like digital property with NFTs, other digital assets. So there are a lot of use cases for crypto that really everyone should know by this point. And so I found that a little surprising that he would say that. But anyways, second thing that happened is what happened from Charles Schwab, chief investment strategist. Because the chief investment strategist at Charles Schwab came out and said that she doesn't really like crypto. She said she's very skeptical on it. Doesn't mean it can't work, but she is very skeptical about crypto. And the one question she has always asked herself is, what problems does crypto really solve? So again, we come to the same thing that Neil Kashkari, the president of the Minneapolis Federal Reserve, said. Both her, the chief investment strategist at Charles Schwab, and the president at the Minneapolis Federal Reserve, they both say the same things, really. They both have the same concerns. And both of their concerns are, what are the real use cases for crypto? What problems does it solve that the traditional financial system can't? And so I think the reason why some of these regulators, some people in the investment world don't really like crypto at this point, and why we're seeing the market down a bit, is because they simply don't understand it yet. And that's the problem that we see with a lot of regulators in the US as well, is that people simply don't understand crypto and the use cases for it. So they have all those things that we talked about, like digital property, so that's like NFTs, other digital assets. We also have, like we said, cross-border payments, sending payments cross borders with instantly, next to zero transactions, any time of day. You don't have to worry about business hours or wire transfers, things like that, and helping the unbanked population. But in addition to all this, the simple, easiest thing about crypto is that it's decentralized. And right now, people don't really trust the traditional banking and financial system. They don't trust regulators. So with crypto, you don't have to worry about one government, one organization, one person having control over it. So even if the traditional banking system and governments can make their own cryptos, the problem is not everyone trusts that. So we'll see what happens. But last thing is what the chief investment strategist at Charles Schwab said actually has a bit, we have to give it credit, because this is a concern about crypto, and I do want to talk about this. So she said her one concern is that she doesn't what purpose does it actually solve? What does it actually solve? And what problems can it fix that the traditional banking system can't? She said that. But the other thing is she said she's worried about concentration with crypto. And that in the sense that the top 2% of Bitcoin holders in the world own about 90 to 95% of all of the supply of Bitcoin. And she related this back to what happened with GameStop and Melvin Capital, or any instance where there's like one person who owns a lot, so a lot of that one stock or one asset, and then they sell off their position. Same with we've seen some Ponzi schemes, some fraud happen with crypto, where they get people to invest, they dump all their holdings. So she said one of the concerns is concentration. And yes, that's always an issue with any investment, because obviously with stocks, there are certain regulations in place to protect against that. But for the most part, that is something we're gonna have to keep an eye on in crypto. But I don't think it's gonna be an issue too long, because over time, as we see more people get into crypto, as there are more volume, more big money players get involved, that sort of gets rid of the issue of concentration and the issue of one person selling off a big position and really hurting the market. Because we've already seen that happen with Bitcoin already, where, let's say what happened with China. That was a pretty big event where they banned cryptocurrency, they banned Bitcoin mining. And so even though that happened, the market didn't crash and go to zero. We did see a couple of concerns, and we did see a bit of a scare. The market did drop. But I think at this point, we're sort of past the issue of concentration, at least with Bitcoin. Yes, it could happen with other crypto assets, but Bitcoin at this point is too big. Market cap is really too big for that to be a big concern, and there is enough demand. I don't really think that would be a big issue. But anyways, that's what's going on with crypto. That's why we're seeing the market down a bit. That's what the Federal Reserve President, Minneapolis, Neil Kashkari, said, and what Chief Investment Strategist at Charles Schwab said as well. Hope you guys enjoyed today's video, and I'll see you in the next episode.